initial remarks, and after that we'll open for questions and answers.
So, first of all, my sincere apologies for keeping you waiting this long. We had quite a marathon board meeting, lots of agenda items. We couldn't even finish. We finally had to defer some items due to lack of time. So, my sincere apologies to keep you waiting. I thought maybe we'll just do a press release and we won't do the press meet, but I think you all opted otherwise. So, we are happy to do that. Um, so, what I will do is, you've seen the press release. What I will do is, like always, give you a very broad overview of each of these items to share the regulatory intent and regulatory thinking behind each of these items. And then we'll move quickly on to question and answers. So T plus 6 to T plus 3, this is again one of those global firsts, I think. We will do the benchmarking and validate that. But like we moved into T plus 1 settlement for secondary market, and it's something that most jurisdictions are yet to implement, and they are they've been extremely complimentary of the fact that we did that without any glitch, any problems in terms of transition at all. We are very confident that similarly, this T plus 3 will also happen without a glitch, because all the market participants involved, whether it is the exchanges, clearing corporations, the bankers, the RTAs, everybody has actually done their testing and their stress testing to figure out that they will actually be able to meet all the timelines that have been now put down. Overall, I guess what we're really pleased about is that what this will result in is that the issuers will get their money quicker, the investors will get their shares quicker, the those who didn't get allotment will get their refund or the unblocking quicker. So at the end of the day, time is money. So with this process, we will be giving to all the market participants lots of money in the form of 3 days. Um, Item number 2 is in the area of listed debt. Here there are two provisions which are in some way linked. The first is in respect of if an entity has a listed paper, then subject to some provisions and some exemptions, the regulation will now be that all the paper that they issue would need to be listed. The reason for this is that, as you know, the bond market is not very liquid, and price discovery and valuation happens based on not just the trading in that particular in the paper of that particular issuer, but also in terms of the primary issuances done by that issuer. And therefore, the transparency on what was the latest primary issuance done by that issuer becomes very important for price discovery in the secondary market. So that has really been the driver of this proposal. Having said that, so what they will really be required to do, and in any case, those issuers are complying with all the regulations because they have one listed paper, so they're anyway complying with all the regulations. The only additional requirement from them will be in terms of transparency of the structure and the terms of the what so far was unlisted debt issuance. So that is something that will help to improve price discovery in the market. Linked to it is the issue of voluntary delisting, because when we got feedback from the market, as you know, we do very extensive public consultation. So one of the feedback that we got was that there may be some entities who do not really have plans of a lot of issue raising and raising of funds, and they were a one-off issuer, and they may not want to remain listed. So is there a mechanism for them to delist their bonds and be able to then therefore not have this requirement of continuous listing? So we have facilitated that, again subject to some conditions and some requirements. Number 3 is the enablement of direct participation in the limited purpose clearing corporation. In the last board meeting, the board had approved certain provisions for the Limited Purpose Clearing Corporation. As you know, this is the clearing corporation for the corporate bond repo market. So, this, as you would recollect, is really a very important institutional building block for the bond markets, because if we are trying to encourage liquidity in the bond market, that can come only through market making. And market makers will have a viable business model only if they can have access to low cost funds for their inventory. And that can only come from the overnight market in terms of the corporate bond repo market. So, as a result of this, this last time we had done, there are two modes by which people can participate in the LPCC. Because this is an overnight market, the timeliness of being able to lend and borrow money is very important. So, people would want as long a period to have flexibility in terms of being able to do the transaction, but they would need to have the settlement as quickly as possible so that they have access to funds. So, for that, direct participation by the clients in the LPCC is quite crucial. So, today the board approved a mechanism which would enable that to happen in order to facilitate even greater participation in the corporate bond repo market. The next item is in respect of REITs and InvITs. As you know, SEBI considers this a very, very important channel or a very important product through which capital raising can be done in our markets. We think there's a huge potential both in terms of our infrastructure space as well as the real estate space. And we found over the last many months that there is a very significant interest from capital providers, including overseas providers, in these vehicles. So, what we have really done is we have introduced the concept of so first what we have done is we have brought in a minimum unit holding requirement by sponsors. Reason for this is really very similar to the concept of skin in the game in mutual funds that we have. So the thought is that since the sponsors play a very active role in the REIT InvIT structure, very often they are the ones who are the promoters of the investment manager or the project manager. They actually are the operating entity for the operating asset. Therefore, for them to have a skin in the game beyond the 3 years that we had currently stipulated was important. However, again, based on the market feedback that we received as part of our public consultation, we got a lot of feedback, and we have therefore created the concept of the self-sponsored investment manager, which means that if an original sponsor wishes to have 100% monetization and to exit his role as sponsor, he not only will anyway have the option of finding another sponsor to come and step into his shoes. That was an option that was always available. But now they would also have an option of the investment manager itself being a self-sponsored investment manager. So this is additional flexibility which has been offered to the industry, and there has been a very positive response to this flexibility. We then move on to item number 5. This is also something, again, which is in response to the need of the market. As you know, REITs and InvITs are very long-term investments, and they tend to be big, bulky investments. They're not a very diversified set of assets. And in that context, the unit holders felt that there was a need for them to be a part of the decision-making process of the investment manager, particularly because a large number of transactions do tend to happen as related party transactions with the sponsor, because the whole construct is that the sponsor is really monetizing his or her assets. So a large part of the assets that are purchased by the REIT or InvIT actually belong to the sponsor. So in a way, it is a related party transaction. And on an ongoing basis, a lot of the management of the asset is done again by the project manager or the investment manager, which is again typically belonging to the sponsor. So, in this context, in order to give a uniformity of rights to the unit holders, what we have proposed is that anyone who crosses the 10% threshold of unit holding has the right to nominate a director. Of course, they may choose not to exercise that right. And even people who are below the 10% threshold can get together and nominate a person. But naturally, this person would need to be fully empowered by the investors who are nominating nominating him or her, because there are very often confidential deals, there is confidential information, timely decision making. So it is envisaged that there would be some form of power of attorney. So if 3-4 people together have 10% and are nominating somebody to the board, they would effectively give a power of attorney to this person to represent them on the board. So this would ensure that there is a certain parity and uniformity of nomination rights on the board of the investment manager. The next one is in respect of additional disclosures from FPIs that fulfill certain criteria, certain objective criteria. Here, the essential driver and the regulatory intent really is that there is a possibility that if there is a layering of investments across various FPIs and deeper layers within the FPI, then it is possible that the people who are actually the economic interest holders of the FPIs may be on an aggregate basis, may be holding enough percentage of the shares so as to either trigger the minimum public shareholding regulations or the SAST, which is the substantial acquisition of shares and takeover regulations. So one of these two, there could potentially be a violation which would need to be examined if so the granular information would ensure that this violation does not happen. Also, we were concerned about the possible misuse of the FPI route to circumvent requirements of Press Note 3, which, as you know, is applicable for FDI investments. And so all of these things put together, we have come up with the proposal, broadly speaking, for two categories of FPIs. One category is that which holds more than 50% of their Indian equity AUM in a single corporate group, Indian corporate group. This is the first category. The second category is where FPIs, and as some of you may be familiar, there's a concept called FPI group. If they together hold more than 25,000 crores of equity AUM in the Indian markets, then we consider them quite significant. And so this would be the second category. However, not all people who are qualifying under this would necessarily need to give the granular disclosures. There are a large number of entities which are actually exempt. So, for instance, any government or government-related investor, any sovereign wealth fund, any pension fund or public retail fund, listed ETFs, certain listed corporate entities, certain verified pooled investment vehicles. All of these people would really be exempt from the provisions of this disclosure. And there would be only a relatively small, where this concentration or this size is there, who would then be required to make this additional disclosure. The last one is in respect of our grievance handling mechanism. As you know, SEBI runs the score system. So what we have done is to streamline and strengthen that score system and also create a link to a new platform with the online dispute resolution mechanism, which was approved in the previous board meeting. So here what would happen now is that the investors who have a grievance would have the ability to, first of all, there would be two levels of escalation. So apart from the intermediary who is supposed to resolve the complaint, there would be a designated body who would need to review that if the investor is not satisfied. So let's say an exchange would be one such entity. If the investor is still not satisfied, then SEBI would review it. So that's the second level of review. If after that they are not satisfied, they can go to the online dispute resolution mechanism, where again there is a conciliation mechanism. And up to this level, this is all completely free of cost. Investor doesn't have to incur any cost whatsoever. If after that he still agreed, which means four levels have really gone against the investor or in favor of the intermediary, then it would need to go into an arbitration mode. And because these new ODRs are there, they are much more cost effective for the investor as compared to the traditional modes. But of course, the investor would still retain all his rights to approach any other forum as he may want to do for the purpose of his grievance redress. So that was also approved by the board. And of course, our annual report and our annual accounts were also approved by the board. So that's where we are.
Thank you, ma'am. We'll just call one by one. Yeah. Menaka, you can go first.
Hi, good evening. I have questions mostly to do with the enhanced disclosures for foreign portfolio investors. And I have two or three different questions all related to each other. So I can put them to you all together. First, I'd like to get a comment from SEBI on the timing for this change. Why have you decided to review disclosure regime for foreign investors at this point in time? What was the potential trigger? And what are you hoping to achieve through this? That's one. Second, whilst I understand that this applies mostly to foreign portfolio investors, the same could be achieved through classes of domestic investors as well. That is the violation of MPS or SAST. Are you looking to seek any kind of further enhanced disclosures within other asset classes besides just the foreign investor class? That's the second. And the third bit I wanted to ask was whether in any of the responses you got to the discussion paper, there was any significant pushback from the foreign investor community on this enhanced compliance that they have to deal with, or any expression of we will not be able to do this because of secrecy laws across the world, etc., etc. Thank you.
So I'll take a couple and then I'll hand over to Anand. So in terms of the timing and the trigger, this issue of FPI beneficial ownership um, and the implications for various regulations of ours is an issue which is about a year and a half old. So if you were to be a fly on the wall and be able to fly down onto that file, as you know, in the government we have files, you will see that the first paper on that originated about a year and a half ago. And this has therefore been in discussion both internally and externally. And it was something that we felt the need to do. And we think that these two issues, which to us are important, MPS, SAST, and of course the issue, the larger national issue of Press Note 3, and therefore it has manifested itself at this stage, but this was triggered and the file originated about a year and a half ago. In terms of domestic investors, the point about it being equally applicable to domestic holders is true. However, the big difference is that if an entity is registered in India, the powers that SEBI has in order to be able to access the information about the holdings and be able to go behind each layer of the holdings is high, because all the data resides in our country and SEBI has the powers to call for them. Whereas when it comes to the foreign entities, there are limitations on what SEBI can do, whether it is on its own or whether it is under the MMOUs that we sign with ISCO and under which there is multilateral collaboration. There are certain limitations to that access to that information. And therefore, it becomes necessary for SEBI to stipulate this upfront at the start itself, so that the rules of the game are very clear and people know and understand that they're going to have to give this disclosure, irrespective of which jurisdiction they are coming from. In terms of the feedback from the market, Anant will take that.
Thanks, ma'am. So, short answer, Minka, to your question, no real, substantial pushback to the proposals that we saw. We did hold a lot of suo motu consultations with many FPIs. Many stakeholders also reached out to us and gave us feedback. I think we got about 35 sets of feedback, formal feedback. Um, there were some questions about how would you decide the exemption categories that the chairperson referred to, and we actually learned a lot from those interactions. The broad process that we followed was the following: we were very clear that we understood the fact that what we were asking for could be very onerous for some of the large FPI, and that could come in the way of ease of doing business. So our intention was to try and reduce the type 2 errors, where we ask people who are actually doing a good job, not really doing anything bad. We wanted to spare them the effort of having to give us a lot of unnecessary compliances. So we want to reduce that. At the same time, we didn't want to increase type 1 errors, where people whom we wanted to sort of get more disclosures from actually got around it by way of the exemptions. So the discussions that we had with the FPIs helped us do both. As Chairperson mentioned, therefore, the actual potential target list, which might have to give us more disclosures or bring down their positions, came down to a very, very low number. So that kind of helped in the whole process of therefore reducing the amount of potential noise which could come from FPIs. You've picked up your mic, but let me just complete the point. On the contrary, from some of the constituents and stakeholders, we actually got feedback saying not only do they support the proposal very wholly, but they would actually also like to make it tighter. So, for instance, the original proposal that we saw in the consultation paper was that existing FPI should be given 6 months to bring down their positions, and that new FPI should be also given 6 months to stabilize their positions. In the final proposal, we brought that down to 3 months each, which means that the existing FPIs will now have 3 months to come down below 50% concentration in one group or less than 25,000 crores. Thereafter, they'll have to comply with the additional disclosure requirements. Likewise, for new FPIs, it will be 3 months from the time of the first trade, as opposed to 6 months from the time of registration, which was proposed in the consultation paper. So a lot of healthy discussions. We also learned a lot about how we could come up with objective exemption clauses, which would reduce the regulatory burden. And overall, the feedbacks, including from associations that represents FPI, seems to be reasonably positive.
Sorry,
So-
I just have one follow-up, very tiny question. I won't take more than that. So you said that the number of funds impacted in either volume or amount have further reduced based on your understanding? I mean, you put some numbers in the consultation paper, I recall.
That's right.
Is the affected subset smaller than that now?
We sense that it will be a little smaller than that
Okay.
at this moment.
Yeah,
Thank,
yes,
thank you.
yes,
Uh,
yes.
Hello, everyone. Ma'am, you started by talking about how you literally fell short of time and a lot of proposals had to be deferred. I just wanted to understand, I mean, the whole proposal on the total expense ratio regulations for mutual funds, in what category does it fall under? Was it that it had to be deferred because of time, or was the resistance stronger than your commitment to bring this particular regulation?
Oh, the answer to that one is very simple. So this was not due to paucity of time. This proposal was discussed in depth, and the board finally advised SEBI to go back and publish it as another consultation paper. Reason being that as I had mentioned earlier in some forum, that unlike our normal proposals, which are done by way of co-creation with the industry, since this was a price sensitive subject, we did it with the limited data that we had and without the benefit of the data that the industry had. So once our consultation paper was there, then naturally industry came back with their granular data. And for instance, as an example, I would say, for instance, they demonstrated to us that the economies of scale over the last 5 years, which we were seeking to share with the investors, had actually happened. Now, when we saw that granular data and said, okay, we now understand this, so therefore, a lot of the things that we had built into and baked into our original proposal needed to undergo a change. Similarly, there was a lot of discussion about arbitrage funds and how they, by definition and by nature, have a lot of transactions, right? Because you're doing buy sell all the time. Of course, on the other side, you don't need that much of research going on in an arbitrage fund, but the data came to us. And as a result of this data, which came to us from the various stakeholders, we modified the proposal. And the proposal was actually, I think the industry would be quite pleased to see the new proposal. And therefore, what the board said was, look, the proposal has undergone significant change because, as we described, we had more data, new data, and therefore we obviously, as I've always said, that the data will speak. So our policies will always rely on data. And therefore, the board advised us that publish your new proposal, which you have put to the board, publish it again to the industry, and let us see now with this fresh proposal, which is quite different. Let's see what the feedback is. So that is why.
By when do you expect this new proposal to essentially?
Soon, we will, in a few days, we will be doing that.
Okay, as far as the cap itself is concerned, I mean, what could be the changes on that front?
Sorry, on what front?
On the cap itself. ER cap.
Yeah. No, so you'll need to wait until you see the new proposal. So you'll need to see the new proposal. We'll be publishing it soon. Don't worry.
Yeah, Sammy from Business
But I
Standard.
told you the industry will be quite happy, right? So, as I said, we've taken the data that they had. We saw that it was credible data, and we've modified our proposal. So the industry should be quite happy, we think.
Sammy from Business
Yeah,
Standard.
my question is around this FPI disclosure tightening. So, like you said, implementing this would have been easier for domestic investors. But if you have to implement it on FPIs, are there any treaties where they can, seek some sort of exemption from what SEBI has proposed?
So that is the whole thing that, as you can understand, there are some laws of the land, right? And depending on the jurisdiction, that's a question of law of the land. But here, this is a explicit regulation, which by coming into our regulatory purview, they are accepting that regulation. So in a sense, it's like, I won't call it a contract because obviously a regulator doesn't enter into a contract with somebody. But I'm saying ultimately it's like a contract that it has the flavor of a contract to say that now if I'm coming into this regulated space over here as an FPI, I'm agreeing to these terms. So now whatever may have been applicable based on my domicile and my jurisdiction will no longer apply because I'm agreeing to this. So which is why the need for a regulation change, so that it becomes explicit and that people are voluntarily coming and saying that if I want to be an FPI here, I understand that I now need to comply in case I breach these limits.
Ankur.
Hello, ma'am. Ankur Mishra from ET Now. Ma'am, my question is regarding the registered investment advisors. Recently, there were representation which were made by them regarding the new advertising code. And also a related question, ma'am. Recently, there was an ad in newspaper which draws a lots of flag because the ones who are registered with SEBI are tightly regulated while others are getting that kind of promotion. How do you respond to that?
So I think there were representations made to us in terms of by the industry, and I think those have been addressed. And I think some clarification has also been issued by BASL to clarify that. And my understanding is that the matter is now settled. In terms of the ad, did not pertain to SEBI, so I have no views on it. I have nothing to say or add to that.
Yeah.
Ma'am, one more just question regarding the exchanges. Ma'am, recently BSE and NSE has jointly made a release regarding the withdrawal of Friday Bank Nifty expiry. Now, ma'am, on one hand, you have issued a discussion paper where you have mentioned that the customers or the investors should get a choice between the exchanges. But now, in this case particularly, both the exchanges have decided among themselves or which expiry or which day? I mean, what is your view on that?
So, in our view, that's actually a very mature and a sensible approach, because at the end of the day, what benefits everybody and the entire ecosystem is diversification of risk. See, at the end of the day, today, everything is technology driven. And if everyone's position is concentrated on a particular day, it just increases the concentration risk of that day. And whatever may be the event that may happen on that day, it could be a cyber incident, it could be a failure of something, whatever may be the effect, the concentration of risk is never a good thing. So according to us, the two exchanges sitting together, reconciling this, and in the wider interest of saying let's have risk diversification in the market, and in the long run that helps everybody, we think it was a good move that they made.
Yeah, we'll come back. Jayashree, please. Please be brief in your question so that we can do it faster.
Ma'am, just a clarification to the disclosure requirements for offshore funds. The privacy laws waiving off is still a part of the final cleared proposal, because it's not in the release. That's why I'm asking.
Sorry,
The waiving of privacy laws, is it part of the finally cleared notes?
yeah. No. That they would need to
Waive off the privacy
waive off the-
rights?
Yeah,
it's
they
part-
would. That's what I said, that as a contract, they're now saying we are agreeing to waive off our privacy laws, so that we are now no longer bound by the privacy laws of our domicile. We are saying we will give you this information.
What's that? Thank you so much.
Brajesh,
So,
Just to add, Jayashree, what we are saying is that you are bound to give us additional disclosures if certain criteria are met. As Chairperson said, more than 50% concentration in one group, more than 25,000 crores, and you're not exempted. If you're unable to provide such data, your registration will no longer be valid. So that's the point. You're supposed to give it to us. You signed up to giving it to us. If you can't give it to us, then your registration is no longer valid. And
Brajesh,
existing funds, as Chairperson said, will acknowledge that the rules have changed, that if they happen to breach the criteria, they'll have to provide us the additional data.
Brajesh,
मैम 3 छोटे छोटे सवाल।
तीन बड़ा संक्षिप्त रूप से पूछिए।
बिल्कुल। पहला ये कि आपने आईपीओ की टाइमलाइन तो घटाई है, लेकिन आईपीओ में रिटेल पार्टिसिपेशन बढ़ाने पर, क्योंकि रिटेल के नंबर बढ़े हैं मार्केट में, तो जो उनका कोटा होता है उसको बढ़ाने को लेकर कहीं कोई थॉट है क्या? पहला। दूसरा सवाल, ये जो आईपीएफ का अमाउंट होता है इन्वेस्टर प्रोटेक्शन फंड का, उसको रिव्यू करने की कहीं कोई थॉट?
sorry, concept?
इन्वेस्टर प्रोटेक्शन फंड, उसको रिव्यू करने का कहीं कोई थॉट प्रोसेस है, कहीं कोई चर्चा हो रही है? एंड थर्डली, ऑप्शंस में बहुत ज्यादा रिटेल ट्रेडर आ रहे हैं, तो उनको रोकने के लिए या उसको कहीं एक तरह से अलर्ट करने के लिए कोई मैकेनिज्म?
फ्रैंकली मुझे समझ में नहीं आ रहा मैं कैसे जवाब दूं। आईपीओ में रिटेल कोटा बढ़ाने का कोई प्लान नहीं है, कोई इस तरह की चर्चा नहीं चल रही है। जहाँ तक मेरी समझ में आ रहा है कि ज़्यादातर जो कमेंट्री हुई है आईपीओस को लेके, उसमें ये हुई है कि देखिए जो प्राइस डिस्कवरी का मैकेनिज्म है वो परफेक्ट नहीं है, और कभी कभी जो जिस प्राइस पे आईपीओ होता है वो ज़्यादा देर लास्ट नहीं करता या प्राइस घट जाती है। तो इस फिनोमिनन को देखते हुए नॉर्मल जो रिटेल इन्वेस्टर है उसका अगर लॉन्ग टर्म होल्डिंग का इरादा है तो ज़्यादातर रिस्क पॉइंट ऑफ व्यू से उसे ये सोचना चाहिए कि मुझे क्या जल्दी है। देखिए बड़े बड़े जो इंस्टीट्यूशनल इन्वेस्टर होते हैं उनको बड़ा ब्लॉक डील लेना होता है, वो अगर मार्केट में उतरेंगे इतना ढेर सारा लेने के लिए तो प्राइस तो ऊपर बढ़ेगी, उनका कॉस्ट ऑफ एक्विजिशन बढ़ेगा, तो वो लोग आते हैं आईपीओ में, वो तो समझ में आता है। अब रिटेल में आप हैं, मैं हैं, आई एम नॉट अलाउड टू ट्रेड और इन्वेस्ट, वो अलग बात है, किसी जमाने में होता था, तो हमको क्या फर्क पड़ता है, वी आर नॉट गोइंग टू मूव द मार्केट। सो अगर हम लॉन्ग टर्म इन्वेस्टर्स हैं तो हम प्राइस सेटल होने के बाद आ जाएं, इजंट इट? तो वो जो इम्परफेक्ट प्राइस डिस्कवरी का मैकेनिज्म है आईपीओ में, वो उस दौर को निकलने दे, शायद एक क्वार्टर भी जाने दे, एक और रिजल्ट भी आ जाएगा। तो जो रिटेल इन्वेस्टर है, अगर वो लॉन्ग टर्म इन्वेस्टर है, तो रिस्क मैनेजमेंट पॉइंट ऑफ व्यू से तो उसे एक्चुअली बाद में ही आना चाहिए। लेकिन अगर वो स्पेक्युलेटिव ट्रेडर है और वो फंड लेना चाहता है कि नहीं ये तो पॉप अप होगा, इसमें ओपनिंग में बढ़ेगा, तो वो लॉन्ग टर्म रिटेल इन्वेस्टर नहीं है, वो ट्रेडर की तरह ही है। उसकी जो सोच है, उसका जो तरीका है इन्वेस्ट करने का, वो ट्रेडर टाइप का है। तो वो उस तरह से अगर आईपीओ में आता है तो फिर वो उसी तरह का रिस्क भी उठाता है। तो इस चीज के लिए रिटेल कोटा को बढ़ाने के लिए ना तो हमारे पास कोई सुझाव आया है, ना हमने कभी सोचा है। आई डोंट नो सर, अगर कुछ इट्स पॉसिबल कि कभी कभी आई मे नॉट इवन नो कि कुछ चल रही है बातचीत, बट एज फार एज आई एम अवेयर ऐसी कोई बात नहीं। इन्वेस्टर प्रोटेक्शन फंड ऑल्सो नथिंग टू द बेस्ट ऑफ माई नॉलेज, कुछ नहीं चल रहा है। ऑप्शंस हमने ये मैंडेटरी किया है कि वो जो वार्निंग है, रिस्क फैक्टर है, उसका डिस्क्लोजर होना चाहिए। उसके आगे हमारा कोई प्रस्ताव नहीं।
Reena, Economic Times.
Ma'am, I wanted to ask you, in hindsight, do you think that SEBI could have come out with this FPI proposal earlier, since you said that SEBI knew of it 1.5 years ago? I mean, the lot of struggle that SEBI has gone through in some of the cases could have been avoided probably if you had the powers to come out with this, then SEBI shouldn't have to go and knock at so many doors to get certain information. The timing of this is something which we are not able to figure out, like why so late in coming out with something if you had the powers to come out with a circular like this.
So I think there are many areas where the only SEBI is involved. Okay, so if we want to change some regulation, let us say in mutual funds or something else, we are the only regulator that needs to have a view on that, right? And we go to the industry, discuss, etc. In the case of FPIs and this whole issue of information and beneficial owner, it is dependent on the PMLA rules. And the PMLA rules are dependent on the FATF guidelines. So this is a much wider discussion, and therefore our stakeholders in this discussion are many more than where we would simply take a unilateral action. I don't mean unilateral as in unilateral, but there aren't other people to have to consult in terms of being able to do that other than our own stakeholders. So this being a matter which had much wider implications all the way to FATF required that process of discussion and engagement, which is what took us some time to be able to reach a conclusion.
Yeah, Sajid.
Hi, ma'am. Good evening. My first question is with respect to the T+3. You made it in two phases. One is voluntary from September 1st and then mandatory from December. If all the participants are on board and they're ready to do it, why have you made it voluntary? The second one is, in the last meet, you said ASBA-like feature for secondary markets will be across the markets.
Sorry, what will be?
ASBA-like feature for secondary markets.
ASBA,
Like
yeah.
feature for secondary markets will be for across the market. But when your circular came in, it was only for cash market, and it was left up to the clearing corporations to offer other segments in that. And the third one, ma'am, since the Supreme Court committee report is out, uh, you know, uh, in that committee, when you made presentation, you said that there are certain measures that you are taking to enhance the market safety. Uh, could you elaborate what are the measures that you're taking?
Okay, so T+3 voluntary, this is just a philosophy we follow, that you give a glide path to people, you give time to people, people need to adjust. So it's not, we don't think that the glide path is extraordinarily long. I think it is September and December. September and December. We're sitting in June today. So this is more consistent with our philosophy that whatever you do by way of a glide path and give the market enough time to adjust and absorb the changes. In terms of ASBA, the design of the proposal is very much implementable for both cash and FNO. Again, in the spirit of saying, should we start in a small way and then scale up and then move up? Because at the end of the day, we know that the cash volumes are much smaller than the FNO volumes. So for us, and also the question is that uh, the benefit of the ASBA is much more in a delivery, right? Because you're saying my securities are lying here, my cash is lying here, then let it just be blocked. In the case of FNO, a large part of the collateral which is being posted is also in the securities, which is anyway we've done pledge repledge. So for us, it's always, again, as I said, a glide path. The framework is the same, but we are happy to give the industry a glide path and an adjustment period. In terms of the Supreme Court committee, of course, as I mentioned before, we would not be able to comment on anything that is before the court and its committee.
ET on this.
नमस्ते मैम, अनुराग फ्रॉम ईटी नाउ सुदेश। मैम, जिस तरह से अभी आपने बताया कि जो एफपीआई डिस्क्लोजर के नियम लाया उसमें 1.5 साल तक की सघन वो चर्चा की गई, जांच की गई, गहन किया गया, तो इससे कितना असर होते हुए देख रहे हैं एफपीआई निवेश पे? आपका मानना है कि जो आपने 1.5 साल तक गहन उसके अध्ययन किया है तो ज्यादा असर नहीं पड़ेगा?
देखिए, हमारा जो एक्शन है वो रिस्क बेस्ड होता है। तो जहां हमें रिस्क दिखता है, हमारा मानना है कि हमें उधर अपना रेगुलेशन ग्रैन्युलर बनाना चाहिए। सो ये जो सर्कुलर है वो रिस्क के हिसाब से है। और जो मेंबर ने कहा कि वो जो साइज है वो रिलेटिवली स्मॉल है, इसका ये मतलब है कि वो हम अभी फिलहाल जो हमें रिस्क दिखाई दे रहा है वो स्मॉल ही है, हमें बहुत बड़ा रिस्क नहीं दिखाई दे रहा। अगर बड़ा रिस्क दिखाई देता तो हम उस तरह का प्रपोजल लाते। सो जहां पे हमें रिस्क दिखाई दे रहा है हम उस पे लागू करेंगे। A lot of the exemptions also, if you see, what is driving the exemption? हम किस बेसिस पे बोलते हैं कि इसको exempt है, इसको exempt नहीं है? जहां पे रिस्क दिखता है वहां पे exemption नहीं है, जहां पे रिस्क नहीं दिखता है वहां पे exemption। So impact we expect will be very very small, because at the end of the day जितनी entities impact होंगी, जो total AUM impact होगा, पूरे हमारी मार्केट में हमारे टोटल मार्केट कैप के हिसाब से कुछ भी नहीं, बहुत ही छोटा अमाउंट।
मैम, दूसरा सवाल, मैम, जो आज इन दिनों
सॉरी 1% से कम।
मैम, दूसरा सवाल ये है कि इन दिनों काफी चर्चा में है जो रियल एक्सपर्ट जो आपसे मान्यता प्राप्त नहीं है लेकिन उनकी रीच जो है वो मिलियंस में है, तो एज ए रेगुलेटर सेबी के तौर पे आप क्या चाहेंगी कि उनका द्वारा जो इक्विटी मार्केट का, शेयर का जो प्रचार प्रसार है वो बढ़ता जाए या उस पर कुछ निरंकुशता लगाई जाए?
आपको क्या लगता है?
आपकी, क्योंकि रियल एक्सपर्ट है, उनकी फॉलोइंग मिलियंस में है, वो और बढ़ते ही जा रहे हैं, ज्यादा से ज्यादा लोग उसमें जुड़ रहे हैं, ज्यादा से ज्यादा आईपीओ के बारे में, ज्यादा से ज्यादा कंपनियों के बारे में, ज्यादा से ज्यादा सेबी के बारे में वो ज्ञान बढ़ा रहे हैं, लेकिन आपसे मान्यता प्राप्त नहीं।
सिर्फ वही कर रहे हैं?
ऑन रिकॉर्ड तो वही बता सकते हैं।
चलिए ऑफ द रिकॉर्ड भी बात कर लेंगे। पिछले 2-3 मीटिंग्स में ये चर्चा हुई है कि इन्फ्लुएंसर्स बढ़ रहे हैं और सेबी का क्या मानना है इसमें। आपने देखा होगा हाल ही में हमने कुछ ऑर्डर्स इशू किए हैं, वो तो आपने नोटिस किया ही होगा। उससे ऊपर अब जो हमारी थिंकिंग है वो अब क्रिस्टलाइज हो रही है। कुछ एक महीनों में हम कंसल्टेशन पेपर लाएंगे। उसमें एक जो जरूरी एलिमेंट रहेगा वो ये रहेगा कि जो हमारे रेगुलेटेड एंटिटीज हैं, जैसे कि एक्सचेंजेस, ब्रोकर्स, म्यूचुअल फंड्स वगैरह, वो किसी भी तरह से एडवर्टाइजिंग या इक्विटी या प्रॉफिट शेयरिंग या रेफरल फी वगैरह के माध्यम से अनरजिस्टर्ड एंटिटीज के साथ ताल्लुक नहीं रख पाएंगे। सो हमारा ये मानना है कि अगर आप हमारे यहाँ रेगुलेटेड एंटिटी हैं तो आपके जो पार्टनर्स हैं और आपके जो ताल्लुकात हैं वो भी रेगुलेटेड होने चाहिए। तो आप अनरेगुलेटेड एंटिटीज के चैनल पे या जो कुछ भी हो उनके साथ उन पे आप एडवर्टाइजिंग नहीं कर पाएंगे, आप उनको रेफरल फी नहीं दे पाएंगे, आप अपना लिंक वहाँ नहीं दे पाएंगे। ये एक बहुत इम्पॉर्टेंट एलिमेंट रहेगा हमारे कंसल्टेशन पेपर में। अभी वो तैयार नहीं है, लेकिन इतनी बात क्रिस्टलाइज हुई है कि हम ये स्टेप लेंगे। दूसरी बात जो रहेगी उसमें कि जहाँ पे कोई भी इंड्यूसमेंट हो रहा है तो आप अगर लोगों को जेन्युइनली पढ़ा रहे हैं, हमें उससे कोई दिक्कत नहीं है। इनफैक्ट अच्छा ही है, क्योंकि हमारा भी ऑब्जेक्टिव है इन्वेस्टर अवेयरनेस होना चाहिए, इन्वेस्टर एजुकेशन होना चाहिए। तो अगर आप जेन्युइनली लोगों को एजुकेट कर रहे हैं, हमको उससे बिल्कुल कोई तकलीफ नहीं है। लेकिन अगर आप इंड्यूसमेंट दे रहे हैं कि आप ट्रेड करिए और आप लाखों कमाएंगे और आप करोड़ों कमाएंगे और 2 साल में आप लखपति करोड़पति बन जाएंगे। लखपति तो रोज ही बोलते हैं कि आप कमा सकते हैं, तो करोड़पति बन जाएंगे। तो ये जो इंड्यूसमेंट है, जबकि अगर वो जेन्युइनली एक्सपर्ट हैं तो वो भी जानते हैं कि मार्केट में ऐसा कुछ नहीं होता है, कोई गारंटी नहीं होती है, राइट? वॉरेन बफेट का भी लॉस होता है। तो अगर आप एक्सपर्ट हैं और आप रिप्रेजेंट कर रहे हैं लोगों को कि ये एकदम गारंटीड तरीका है पैसे बनाने का, तो वो फिर हमारे सिस्टम में इंड्यूसमेंट के तौर पे माना जाएगा और वो एक फ्रॉडुलेंट और मिसरिप्रेजेंटेशन, मिसलीडिंग काम माना जाएगा। सो ये जो 2 पहलू हैं, ये हम आगे जाके इनको डेवलप करेंगे। एज आई सेड, अभी कंसल्टेशन पेपर तैयार नहीं है, बट हो जाएगा।
Thank you, ma'am. Thank you so much.
Yes, please, ma'am.
Ma'am, with respect to influencers, a bigger issue is that there's a problem of plenty. There are way too many of them across the country. As you said, there will be a consultation paper, but what would you think is a better way to act as per according to a complaint that you get from a person who has been frauded or a suo moto investigation?
लेकिन वो तो हमारे तहत आते ही नहीं है। उनका तो सोशल कॉन्ट्रैक्ट है किसी के साथ। मैंने पिछली बार भी कहा था कि अगर आप अपने ताया जी को एडवाइस दें कि आपको कहाँ इन्वेस्ट करना चाहिए, हम आपको पकड़ सकते हैं क्या? नहीं पकड़ सकते। सो द क्वेश्चन इज नॉट our regulation. So I told you what it will have, these 2 elements. What it will not have is, it is not our intention to regulate everybody who teaches people about investing. But if you are giving advice, you're giving stock recommendations, you're giving portfolio recommendations, you need to be registered with us. That's already a part of our law. Right? Investment advisor law, it is already a part of that. But yes, if you are an educator, if you stay with education, we have no problem at all.
Kushbu, business team.
Hi, ma'am. Hi, everybody. A few questions, ma'am. There were several regulatory-wise new regulations that were under works, whether it's PUSTA, the unexplained and suspicious trading activity one, and the wider definitions for UPSI. So, have they been also gone back to review, or have there been some other? They have been deferred due to time constraints. And second question is on the LPCC. There have been some limits for
Sorry,
trading.
you said UPSI and
PUST, the unexplained suspicious trading activity.
Hmm.
And secondly, on the LPCC, there are some limits for credit rating, like AA rated only can be traded on them. Any plans to expand that, to enhance the market? And just third more question on the ESM for microcap and such companies. I believe you have received some representations from the overall industry. What are the any reviews there? These three questions for now, ma'am.
On the ASM, Anand, would you like to take that?
I can just give the broad philosophy, whether it is ASM, GSM, or the new one that we've brought for the specific entities. The broad idea is if there is, on the back of thin volumes, a very large movement, from a perspective of investor protection, from a perspective of making it more difficult to manipulate stocks, which look like ripe for manipulation, we will take steps from time to time. So this is what has been done in the current stipulations as well. We have received some feedback about this being too tight for small stocks, etc. But we think in the overall scheme of things, given that our primary responsibility is investor protection, these tips will remain and should remain. We had a similar feedback when ASM GSM was launched as well. But the overarching remit of preventing manipulation and investor protection remains.
Thanks. On the LPCC, it is a new institution, and its funding is right now relatively small, and therefore, in order to stay within its, बोलते थे ना, एती पाँव पसारिए जेती लंबी सार. So, based on the corpus that it has, the plan is to start with relatively low risk, so AA and above. Over time, the expectation is that it would be able to go down the rating curve as well, but naturally with appropriate haircuts and so on. But I think we would wait to see a maturing of the institution and a strengthening of the settlement guarantee fund before that would really move in that direction. In terms of the unexplained, just remind me again, unexplained suspicious trading activity. Ustra. So I think we had a consultation paper out, but so we didn't take it to the board this time. So it was not taken to the board at all. We have some internal processes going on right now, so we didn't take it to the board. And in terms of UPSI, similar, we are still processing, and we didn't take it to the board at all this time.
Thank you. Just one thing added on the FPI part only, because recently in some other cases, there have been challenges with the PMLA regulations, where the definition of BO and opaque structures have been a little different. With the new norms for FPI disclosures, is there any still gap or how between the PMLA norms of identifying BO and identification of ultimate beneficial owners under the new FPI disclosures that you have introduced?
So it's a very good question, because there is a lot of, I would say confusion in terms of what it is that is there in the law right now and what it is that we are asking for. So the definition of beneficial owner is as per PMLA and FATF. That is not changing. That is not changing. It continues to be the same. What we are saying is that the granular information about the economic interest holders we need to be able to collect, so that across some of these entities, if it turns out that there is a violation, then we need to be able to identify it. So because the mechanism of BO identification is based on thresholds, right? 10% is the common threshold. So if anyone is below the 10% threshold, we are still saying we want to know who are the economic interest holders, even though the BO requirement is not there under PML. So we are not changing the BO definition in any way. That will continue its own track across the industry. All FPIs continue status quo, no change. However, economic interest holders is what we are saying, that for this identified set of entities, we need to be able to know that, so that we know whether there is any violation of our other regulations or not.
Mahalakshmi?
So, ma'am, earlier in the conversation, you were talking about concentration risk when there was a question posed related to exchanges. Now, as you know, NSE is a monopoly with respect to F&O turnover, and that part has obviously grown manifold, and now probably cash segment is becoming very, I won't say insignificant, but 1/7 or 1/8 of the overall turnover. BSE is trying to, nudge in that area. So, what is your position as a regulator? How concerned are you, and what can you do as a regulator, and what would you like to do to reduce concentration risk for the market?
So I think that's a very interesting question, Mahalakshmi. Earlier, um, there used to be discussion about monopolies and what is the implication of monopolies in any system, and that discussion was largely commercial in nature, right? So why do we have a competition commission in India? Because monopolies have a concentration of power, and therefore there are certain implications of that on the consumer. I think that that narrative has now expanded to cover the issue of cybersecurity risk and technology failure risk. And as more and more of everything now depends on technology and cybersecurity, I think the concerns around monopolies are only heightened, they are not less. As a result, as a regulator, what we want is that there should be a level playing field, right? So the odds should not be stacked in favor of one player or another. There is already a certain network effect which is in play, right? Liquidity seeks liquidity. If there's more liquidity here, everybody will go here, and then that reinforces itself. That is a natural thing. It's a well-known phenomenon. However, this should not happen on account of non-level playing field. So the circular that you saw from us or from the exchanges was the first step towards saying that at the very start itself, at the time of enrollment of the customer itself, a non-level playing field is getting created, which is not good and healthy for the market. So it should not happen. And therefore, the customer doesn't know better. So he should be able to trade on whichever venue is good for him and whatever is the best execution price for him. And therefore, this was the first of our circulars relating to level playing field. My understanding is that there are about 4 or 5, maybe half a dozen more things which have come to our attention as to which are mitigating against level playing field. Maybe on a standalone basis, each of them may not be very large, as this circular was not earth-shattering, but it was a step in leveling the playing field. I think you will see about half a dozen more such small things, but which will go to promote a level playing field so that everybody has an equal chance and the odds are not stacked against anybody.
We will take last 1 or 2 questions. Rajesh Gajra, please.
Hello, ma'am. You can hear, okay. Ma'am, how many FPIs would qualify as per current data who would meet one of these 2 criteria? And what would be the value of assets held by them as a percentage of total equity assets?
So, because the exceptions are of a particular nature and are going to be notified in due course, the numbers could change. But right now, the overall value is under 1% of the total market cap of the markets. So it's a very small number.
1% of market cap or 1% of equity holdings of FPIs?
No, of market cap.
Market cap. Okay, thank you.
Last 2 questions, Brajesh.
Sammy,
संक्षिप्त रूप से एक ही सवाल पूछिए।
हाँ,
बहुत हो गया और लोग भी हैं पूछने के लिए।
मैम,
फर्स्ट ऑफ जुलाई से आप स्ट्रीमिंग इंप्लीमेंट करने जा रहे हैं, क्या किसी तरह का कोई रिप्रेजेंटेशन आया है कि कोई प्रॉब्लम हो रही है? क्योंकि कुछ सेक्शंस इसमें इस तरह की हैं कि दिक्कतें हैं और वो रिलीफ चाहते हैं.
If you don't mind, I'll answer in Hindi, in English, sorry. Yes, we have received some representations about upstreaming, which we are looking at. Some of the issues we think are resolvable. They are not really a stumbling block. Some issues relating to bank account opening, etc., we are looking at closely. If required, we will give some time for this actual implementation. As things stand sitting here, I don't see a big stumbling block towards starting. Having said that, the discussions are ongoing.
Yeah. Yes, one question, please.
Ma'am, one question on the various legal cases which have reached the doorsteps of SAT and so on and so forth. Most of them have been overturned and they've been ex parte orders. I mean, as we speak, two are under consideration. Just want to understand from you, is there any change in your legal strategy that you're considering, not looking at ex parte orders and giving the other party a hearing before you actually pass an order? I mean, is there any change that you're thinking, something that's not working?
So, our view in this is we have to do what we have to do, and every forum has to do what it has to do. So, from our side, the criteria for passing interim orders, ex parte orders is very clear, and it's a very well articulated view that there has to be an urgency in the matter. If it doesn't pass the test of urgency, in our view, we do not pass interim orders. Now, other forums can have a difference of view on what is urgent, to what extent it is urgent, what is not urgent. That's a matter that each forum has its own point of view. We have a test, but this is the principal test. That is there an urgency? Is there an ongoing violation? Can things worsen? Can it put more investors at risk? Is there a problem for which there can be no subsequent redressal? So if we don't pass an order, more damage will be done, which will not be possible to reverse. Those are the drivers that we assess when we pass interim orders. And if the other forums find that they have a different perspective, it's part of the
Are
process.
we able to
That's the
convince
part of
the
a democratic process.
Ma'am, are we able to convince
please.
the other forums about this urgency and ex parte order?
We always represent our point of view. The reason there is an appeal process is that there can always be a difference of opinion. Otherwise, we wouldn't need so many courts in the country, right? There can always be a difference of opinion.
Sorry, just relating to
Informist,
the,
please.
excuse
Yeah.
me. Hello. Hi, ma'am. This is Subhana Sheikh from Informist Media. Today, SEBI has allowed direct participation in limited clearing corp. Earlier, you allowed MFs to participate in repo transactions. So I just wanted to ask, do you think there's really an appetite among mutual funds for, lower rated bonds? You've allowed mutual funds to participate in, repo transactions in debt securities of AA or higher. But mostly, what the word in the market is that they will not go below AAA rated securities. So, what is your view on that?
So there are two different questions embedded in what you have said. One is in terms of the repo market. In general, mutual funds are lenders in the repo market. They are not borrowers in the repo market. For the simple reason that their borrowings, we restrict what they can borrow for, and it's very, very restrictive. So they are generally lenders in the repo market. As far as their appetite for lower rated bonds is concerned, it is a direct reflection of the risk appetite of investors, right? So if investors show a risk appetite to say they want credit risk funds, then they will buy lower rated paper. However, if the investors show an appetite only for higher rated funds, then that's what they will go and invest. So they are not um, they are allocators, they are asset allocators, but within the framework of what the investors like you and me express our preference for. So therefore, it's not a I mean, I cannot fault them to say, oh, why aren't you investing in lower rated bonds? But if you and I don't want to put our money into high risk bonds, how can they put money into high risk bonds?
Sammy?
Yeah, thank you. Very soon there'll be two vacancies on the, two WTM. So has SEBI got any indication as to, how soon these positions will be filled? And another question is around
No, Sammy, please.
discussion papers. Like there are days when there are some half a dozen or 1 dozen discussion papers. Can you spread it out, so that we can also process it better?
So, so I have a lot of empathy for you, because guess who clears them at this end, right? So I have a lot of empathy with you on this concentration of release of consultation papers. As you can imagine, it's, because it's a process, right? So we have a board meeting, we have to work backwards to say that we need to be able to put send it in advance to our board members. That means we need so much time to put that together, and we need to give a minimum amount of consultation period, and therefore this. So in effect, there becomes a deadline by which everyone must do. Otherwise, you're not catching the June board, or you're not catching, right? You're going to miss the bus. If you don't do a consultation by this date, you're going to miss the June board or the September board or the December board. And the KRAs are fixed at the start of the year. So we have a very long list of KRAs. So
can you also...
So having said that, since, as I said, we are also, we empathize with the point of view. We are looking at how to modify some of our internal processes to try and see if we can actually stagger it out a little bit. We have to wait and see how it works, but we are conscious of this issue.
Ma'am, can you put the minutes of the board meeting earlier?
Sorry?
Minutes of the board meeting. If you can...
Minutes of the board meeting can only come when the board approves the minutes, no?
Yeah. मैम लास्ट ईयर के कल अपलोड लास्ट मीटिंग के कल अपलोड हुआ
कल अपलोड हुआ है much 20 days but 3 months.
I don't know. I'll have to look into it.
Rajesh will come back,
I
please.
have a
Rajesh
question,
will
sir.
come back.
The minutes will
Ankur,
get
sir.
uploaded only after the minutes are approved.
Cannot have
at the next
एक ही
board
आदमी
meeting.
नहीं आप लोग भी पूछने दीजिए ना अंकुर
Yes,
आप पूछ लीजिए Rajesh, please hold on.
Minutes and agenda both. Agenda comes first and then minutes comes second.
Yeah, but we have to wait until everybody
When
approves.
the agenda
sir.
doesn't get uploaded, that's what.
Agenda is uploaded.
It's not. It's not. Didn't happen till yesterday.
यस मैम एजेंडा कल अपलोड हुआ है जहां से ये पता लगा कि लोकल ऑफिसेज बंद किए जा रहे हैं
Oh, I see. No, we'll look into it. As I said, the only requirement is the board must approve the minutes. We can't upload minutes without the board. Agenda, according to me, is already done, but I don't know. We can check. We'll check.
Yeah, Ankur.
Ma'am, HDFC and HDFC Bank has announced the tentative date of merger, which is July 1st. Ma'am, recently we learned that mutual funds may have requested for dispensation regarding the single company holding. First, I want to understand, was there a discussion regarding the same, and was there any exemption which was asked by mutual fund companies?
So the answer seems to be that AMFI had requested, and
we had analyzed the data. Actually, they have actually it is a, as per the regulation, it is a there is a provisions. If in case of a passive breach, they can disinvest within 1 month, and with the approval of their investment committee, it can go up to 3 months. So that period is there, and we have seen that there is hardly any scheme which has more. There are 53 schemes which have invested in both the companies, and the breach, if you see, only few schemes which is above 10%. That is the thing.
And that 10 also, I think, as per they go to their trustees, they can get 12. So they have quite a lot of flexibility, right?
Oh,
Single
yeah.
single issuer, the cap is 10, but with approval of, I think with their trustees, they can go to 12. I don't know, maybe
That is for the
better.
case of debt.
Oh, that's debt. Okay. But yeah. So they have a period of 3 months anyway, as per the extent law. And as Mr. Barua is saying, that the data analysis showed that there aren't too many schemes who would have any significant issue in being able to comply with the norms within that period. But why, if the data shows that there should be no problem in being able to comply, where's the need for extension?
Actually, after this,
Yeah, it's a highly liquid stock. 3 months is more than enough.
ठीक है, let us.
Believe that it will automatically get corrected. I mean, in that due course of
they have enough time.
They have enough time.
ठीक है, last question to Brajesh for the.
यस
Yeah.
मैम सबसे सबसे अच्छी बात यह है कि काफी ट्रांसपेरेंसी के साथ सेबी काम करता है, एटलीस्ट सारी चीजें ट्रांसपेरेंट होती हैं। लेकिन एक चीज ये है कि जब कंसेंट मैकेनिज्म था 2016 तक सारी चीजें अपलोड होती थी कि कौन से कंसेंट रिजेक्ट हुए हैं, लेकिन ये जो सेटलमेंट वाली जो नई प्रोसेस आई है उसके बाद से अपलोड ही नहीं होता कि क्या रिजेक्ट हुआ।
Sir, I don't know the answer to that question. It was before my time. I'm sorry. जब से मैं आई हूँ मैं तो settlement ही देख रही हूँ, मुझे consent mechanism का कुछ पता नहीं है. But
As per the regulations, only which has been settled has to be approved. Otherwise, it will be detrimental to the parties whose has been declined. Suppose you go for a settlement and it is said it has been to that process because it will not be in the interest of the
be
party.
prejudicial to that
Yeah.
party. Yeah.
There is sensitive
Yeah. Could be
information.
price sensitive also. Whatever. So.
Thank you so much. Thank you very much.
Thank
Thank you,
you.
madam. Thank you, sir.
And once again, apologies for making you wait this long.